Good day, everybody. It's Greg Schnell, and I am here with the Canadian Technician Report for July the 6th, 2019. Lots of kicking it out there. A few things to cover off. Where to find my blogs and articles. Look on StockCharts on the Articles tab, drop-down menu on the right, and there's three different areas. Canadian Technician, don't ignore this chart, and Chart Watchers. And always, if you're interested in getting more info, hit subscribe at the bottom. Contact information, you can reach me, gregas at stockcharts.com, and on Twitter at Schnell Investor. Okay, our agenda today has lots to cover. Banks set up with yield reversals, and I covered this quite a bit on the Market Buzz, so I don't want to cover it too much here. But the yield reversal, I think, could help the banks, and all of the charts look like they want to break out, so that's an important area to focus on. U.S. dollar had a strong reversal this week, and so a lot of the setups that we had in place around commodities, the Russell, a whole bunch of things like that, really had a big pause. So that's going to be the majority of today's show, is discussing why it's so critical that we pay attention here. Transports and semis didn't have a great week, so we want to cover that off. China trade deal is now out of the news. So remember, we had the big G20 and Trump and Xi and Xi. We're going to have a great discussion. And then obviously not much has happened, and China basically said, remove all the tariffs and we'll finish our discussion. So lots going on there, but no resolution. So I wouldn't get apathetic here. It seems like there's lots to worry about. Russell, last week I said looks great here, and this week literally the relative strength rolled over and big pause in place here. So if we start to fail, I think it's the Russell that would cause the damage. Hong Kong and Shanghai had small gains from the G20 as well. So they both kind of perked up slightly, but it was nothing great. And I'd say the one trade that really does look set up is the natural gas trade. Very volatile for those that are interested, but definitely a place to look. Okay, let's start on the commodities. I think there's a good reason to do that this week. Let me just move this bar out of the way and give it a little bit more real estate. There we go. Okay, so here's the CRB monthly. And again, we're right around this red line. We've been living here for 3 or 4 years now. Here's the US dollar little pickup, and it doesn't matter much, but so far it's a higher low. And on the weekly charts, when we get into it in the dailies, you'll see that's a meaningful change. Looking at the CRB on a daily or on a weekly chart, what we have here is a big outside week stuck between the 40-week and the 10-week. We finished pretty much flat on the commodities, but the bigger issue is if we made this high in momentum and now make a lower high in momentum well below zero, that would be very, very, very bearish. We haven't seen a signal that week in a long time. DBC, the Commodity Index Tracking Fund, we're right at zero, so that's a problem. West Texas, so this week we failed to get back through the 10-week, pulled back, and you can see it over here. It's retreating. And again, we had some big moves in commodities. They finished with the rest of the week. Well, I'll say Thursday and Friday were higher than the low on Wednesday, Wednesday and Friday were higher than the low on Tuesday, but nothing great. So a little bit uncomfortable there in terms of the market. I just got to make sure I had those dates right. Yeah, so that's right. Anyway, so we made the low in crude oil on Tuesday and then tested it Wednesday, and then Friday made a little bit higher lows. But again, that US dollar was big this week. So nat gas, here's the push up, and now you can see we've made a higher high on the weekly chart closing basis, so that's nice. And here's the heating oil rolling over at the 10-week. Gasoline made it through. Wouldn't take much to draw a trend line across the top here and see if that's going to stall us out, but we are in the thick of driving season, so that's the good news. Corn pumped up here a little bit. Soybeans pulled down, wheat pulled down. So again, a lot of the commodities pulled back this week. I don't want to make 1 week a threat. It's what happened on the US dollar that makes it so concerning. So here's gold rolling over quite hard, and I think that could be on the back of this US dollar move. But silver never really got going, and now to give it all back right away is kind of concerning. Copper riding this trend line, just sitting right on it. So watch closely. But again, it pulled down this week. Aluminum was sideways this week, but the rare earth metals both were down this week. So here's livestock, and it was up slightly. Sugar and coffee down for sugar, coffee sideways to up marginally, and cocoa and cotton up slightly, and yeah, both of those were up slightly. And now medical marijuana, we had another week where we just gently pulled back. And the fact that it's gently pulling back tells me the sellers aren't aggressive here. Again, the big thing that's coming up soon is the market in edibles. And what we want to watch for is that if they start to turn up, that might be a trade worth pursuing. But they continue to just drift lower. So it's a wait and see kind of market for technicians. Coal and steel both pulled back this week, albeit very moderately. But again, look at the resistance red lines right above them. And having trouble here is not a good place. And this one stalled at the trend line. If I drew a trend line off the top, steel didn't even make it to that trend line. So lots of things to worry about here. And here's lithium sideways and rare earth metal sideways. So my problem was, or one of the theses that started to look like was going to happen, was the U.S. dollar was going to go higher, lower. All of these industrial metals would start to turn up. Look at this down slope here for lithium for a year and a half already, and well, the strategic metals dropped. I'll call it early 2018. Even on the news that China was going to control how much got shipped out, they couldn't bounce. So that's another concern there. That they're quite weak considering the backdrop. So here's the energy index, and we're in this little triangle here in terms of the index. But look, we've got a bear market signal here. Things were starting to look like they were going to bounce off the 40. If they stall here and roll over, this is a really meaningful place to avoid. And it just makes it harder and harder to own, because it looked like everything was going to set up to a move to the upside. Maybe the US dollar is just a 1 week pause, but we have earnings out next week. So we're going to get a chance to see that. The precious metals index is in a bull market signal, but coming out of the high RSI, so it might need to pull back quite a bit before we get a little more patience there. Agriculture just stuck in a sideways range, nothing to work on there. And I own some stocks in that area, and they seem to be doing the same. So looking at the livestock index, trying to perk up here. RSI holding around this 40 level, that's usually bullish, but we haven't got much more than that to go on. Looking at the industrial metals, again, this is a pretty important group, and we've got this horizontal support and resistance level, and we were starting to look like we were bouncing here with some positive divergence. It's not all over yet, but we're living on the bottom of the RSI here. So if things don't start to bounce and improve very quickly, this could rapidly accelerate lower, kind of this sort of a move that we saw in 2015. Now, I will say that the broad markets don't seem to sense that. The sentiment, the breadth indicators look much better than they did in October 2015. As all these commodities fell apart, the breadth indicators are not telling us that at all. So either they think the Fed's going to step in and save the world, or we have this situation where everybody ends up being quite offside because the U.S. dollar gave us a fake out and the Fed gave us a fake out, and then we'll see how this plays out. But it is literally setting up as quite an interesting month coming up with earnings in the middle. Baltic Dry Index still below its 40-week moving average. Nothing good there. XLE, struggling around this important resistance zone. Nothing to really get excited about there. What we started to get excited about was this PPO moving up into the higher territory here, suggesting maybe we finally broken through the spring downtrend. If we roll over right here, that's not helpful. So crack, the oil refiners ETF was up flat 0.02 cents on $28. So hard to get excited about that. And we're still under this downtrending momentum here. So this is a very close place. If this was to break out, obviously that's bullish. If this breaks down right here, it's a pretty big cautionary sign. And again, we're sitting on this long-term multi-year support level. So if it fails here, that's a bigger deal. Frac, the unconventional oil explorers ETF. What we see on this one is it's rolling over right under the zero level, stuck here below the 50-day moving average, and normally we want that to hold up. So that's a bit of a problem if we can't get back above the 50. And again, through the spring we were above the 50, now we're below the 50. So just keep track of that. It's a pretty simple line in the sand, but we're below it right now. We started to bounce on the full stochastic last week. It was starting to give us buy signals. A whole bunch of the groups were kicking off. We had this big downtrend. If all of a sudden this is a false move, so we looked like we were making a higher low. If we're going to fail right here, this is, for a technician, this is the classic signal you want, where you can set your stop relatively close, really just under this low here. And all of a sudden we get a run up and fake out and we're out very quickly. Whereas the problem with buying this high is we have to get all the way down into these sorts of lows if we wanted to use price. My point here is that this momentum, if it fails right here, this is a critical juncture for us, and don't just stay long if they're going to start to break down hard. Okay, here's the big picture on West Texas crude, and as an optimist for crude oil, I'm having trouble being optimistic about that chart when the downsloping 200-day, the 50-day moving average, everything stalled right there and it fell. Now we're still trying to hold and bounce back up after dropping quite fiercely earlier in the week. But if we're playing on the right-hand shoulder here of a big topping structure, this is the kind of place where we really have to stay focused. So don't let this get away if you're in the energy trade. There's a lot of concern here. So the same thing on this West Texas crude weekly chart. We had this big downsloping momentum, came down, pulled down, and just got to the zero level and looked like it wanted to start to crank up. Well, if it was going to start to turn up, that's really powerful for us, and it did not. It's just gone flat this week, and so as hard as this is, this is classic stuff here. If this is going to fail in momentum right at the zero level, you do not want to stay long the energy space. So I'm quite concerned. And again, we've seen this bounce here, got up, rolled over, and fell back down here. If our full stochastic starts to fail at the 50 level, this is pretty bad news. And just from a standing back looking at the chart, you got a downsloping 40-week and 10-week. And we're making lower highs, and this was a lower high. It looked like a higher low, but if this just becomes a next move down, pretty difficult here. So watch closely. This commodities game heated up quite a bit this week with the weak signal and where the weak signal occurred. Looking at crude oil, just zoomed out here, this is a daily chart. This red level here at $59 was kind of important. We're now down here testing this 5 level, 55, 54 level down here at the green line. And what we want to watch for here is, can this hold up? Now, again, we're in this tight range, and everybody should stay focused. If the world is going to start to break out, that would be very, very bullish, and crude should be able to follow along. Again, we've been correcting on the overall markets, on the global markets for over a year. So it's not like 18 months isn't long enough to correct. That's plenty of time. The bigger issue is we want to start focusing on upside reversals, and if we get that, that would be great. Now, if it fails to happen here, that's a pretty meaningful thing. And I guess the issue we'd have is obviously if we can't get trade agreement with China, and then the next trade agreement we have to worry about is Europe, and Europe's already in tough condition. So it's not like the trade discussions are going that well. So anyway, all of this sets up to make a very difficult inflection point if the US dollar is going to race higher. Okay, here's natural gas, and the point I want to make here is at 4-week highs, coming back to touch the 10-week moving average. Well, that doesn't look that bullish. The big picture is obviously that it was at such a low level, and I think the next chart might have a little more data for us. Going back 3 years here, we're significant. We have a significant low, and then this chart here is the daily chart. What I was hoping to see on this chart was that as natural gas starts to get back through its 10-week moving average, 50-day moving average over the last 4 months, that would be a pretty bullish place to get. Now, the concern we have is over here on the left-hand side. It drove sideways for a long, long time. So is natural gas that boring? Or did we hit a new structural low and we can expect a big trade to the upside off that? And that's what new traders would be looking at. Again, just from long-term perspective here, going back to 2002, we're on the lower side of the scale, not the higher side of the scale, so a bounce off these lows could be pretty beneficial. And we've put in a lot of LNG terminals to take natural gas offshore, so it's not like we haven't been set up for it. No real news in the uranium space. This chart continues to downtrend. Didn't really get the price action we wanted to. PPO just continues to, I've got this as a MACD, but continues to be flat. Nothing really helpful. Here's the uranium ETF, which is the miners of uranium, and I've got Cameco's price chart down here in the bottom, and Cameco finished near the top of the range this week, so it wasn't a bad week. What we're looking for again is this upslope in momentum to kind of kick in, and we are above, but this week we didn't make much progress after breaking out last week. So if this is just another false breakout on uranium, that's a hard place to be invested. Copper had a tough week, and that's another reason for a little bit of my pessimism starting to set in. We're back below the 40-week and the 10-week moving averages. That's just not good. And if we don't get the upward swoon here in copper, that puts us back here in this 2015 period where we kind of lose it. So the commodity space really struggled with the move in the U.S. dollar. And this is the bigger picture in copper. Again, if we start to break these big long trend lines, that's a much more serious event. So while I want to stay very optimistic because we're up against that trend line and still above it, I don't want to see that long-term trend line broken. That might suggest more trade damage coming up than we expected. Okay, let me just quickly move through some of these other charts. Yeah, here's steel. Steel still looks good, but again, if this PPO rolls over right under zero, that's just a bearish place to be, and so not comfortable at all. We had a nice full stochastic buy signal earlier in June, and we've been riding it up for 3 or 4 weeks. But the issue we've got is it's not moving very fast, and all of a sudden the momentum pauses here with, I'll call it an average week at the 40-week moving average. Just kind of barely hung in there. Aluminum didn't do anything this week, so that doesn't really help us. Base metals, big downtrend. Where did we fail? Right at it, so that wasn't helpful. The Canadian version of that chart has gold in it, but we're at a long-term kind of top on that chart, and it couldn't break through, so that's a bigger issue. Here's gold, and again, look at that price bar on gold. We finished in the bottom third. We tried to rally high. We had a big down day on Friday and bounced off the new low, but I think by anybody's view of this, we pushed up, we went higher and had a big selling tail. We tried to go higher again this week and had a big selling tail. So there's not a lot of comfort here that this doesn't need to at least get back to this 1360 level, in my opinion, to see what's going to go on here. Now, the gold on the daily chart doesn't give us any comfort. What we see is this PPO has given us a sell signal on the daily from an extremely high level. We tested this uptrend line and it held, but look at the relative strength line here. If this starts to break down, that's usually difficult for gold to make any headway if it starts to underperform the S&P. So all focus is on precious metals this week. The long-term picture, that's a 5-year base. Don't see anything really that I like there. The big issue again is just how it holds up on that 1375 level. GLD, again, we had silent volume, and this week we've already lost the momentum here where our PPO histogram is less than last week. Doesn't make it an end of day trade or an end to the trade, but it's pretty close. Here you have a big hint that the scooter ranking is starting to fail again. And after this big thrust, I would have thought it had much more structure than that, but it doesn't seem to. So that's a real disappointment that that's already starting to roll over. GDX, on the other hand, held up okay this week and is up near the close of the last 3 weeks, so it looks better on a weekly closing chart than even seeing the candlesticks. I think again, we have to watch this US dollar. If it's going to start to run and the yen roll over again, we're probably in trouble on these gold stocks. So caution is warranted, that's for sure. Looking at gold relative to the S&P, in this case, what we see here is we were trending up and now we just had a pullback this week. It still looks okay from a macro perspective. So anyway, cautious trading around the gold area. Silver gave it all back, fell below the trend line, still below zero on momentum, nothing to be happy about there. Pring Special K, no real clues for us there yet. Okay, SLV. Problem I have on this particular chart is it's back below the 200 and above the 50, and that's a big deal. That it just can't hold above that 200-day moving average. We've got a sell signal here on the PPO already, so just be cautious in the precious metal space. Silver miners, same thing. The PPO is still below zero, but it's just starting to move. Again, this is a weekly chart. June 22nd, it was starting to move. And now here the problem is we've kind of stalled out. So stay focused on this area. It's not comfortable at all. Lumber. Looking at the chart here, we had an inside week, so not really bullish. Again, once this US dollar stalls, it really stalled a lot of the commodity space, so that was a concern. Wood is right up at the ETF is up at the 40-week moving average. If it can't break that downtrend, we're probably in more trouble. But I would associate most of this just with that false move down in the US dollar and the reversal. So I think that's the last part of the commodity section to cover off. No real reason to go into the others. They didn't move that much. Again, my comfort level with the whole US dollar change, maybe we should go there because I keep referring to it, is the trend that we thought we had. So we broke the uptrend. We were starting to break down into weakness. PPO giving a clear sell signal, really nice. Well, we still have this uptrend line in play. And what did we get here? A bounce off the 65-week moving average. And where did it soar? Straight back up to the previous level of the breakdown. So the week coming up is still very cautionary, and we're still on this bull market signal, and we did not get down into the RSI of 30 on the weekly chart, which is much more worrisome if you expected a US dollar lower. The reason I expected a US dollar lower was we had this negative divergence setting up where we had higher highs on the price and lower highs on momentum, but we're coming down here. If we bounce off this zero level, that's a pretty important place for the market just to pull back to from positive momentum and then take off to the upside. So this gear shift that we hit on the first week of July, pretty important and quite difficult to call the direction on the dollar right here, but this was a stunning move. We see this 97.5 level trying to play out. This is a really big picture going back to 2010, but it's in place since 2015. Commodities haven't done much since then. And we've got this downtrend here. And what we're watching for is, does this start to hook up? But we just broke the 1-year uptrend line on that special K. So not a whole bunch of comfort as to direction on the dollar. Very, very hard to call right here. We broke our PPO downtrend on the daily, starting to turn up. The 200-day is still in play. The 65 period moving average, we're below it on the daily, and again on the weekly, we bounced off it above. And then the 200 days here in green, we got below it. That's what really started to make it look like it was going to break down. We're moving below both of these, and the sudden reversal makes it hard to call. We did get a bear market signal on the daily on the US dollar where it got down and touched 30. So that gave us more confidence that we were going to have a nice, probably a big move down in the dollar. Again, if it bounces back up and stops at 60, that would be fine. If it keeps going, we have big problems ahead in terms of the setup that we had building and the quick reversal of that. UUP on a daily chart, here's the KST, and it looks like it wants to start to turn up, and you can see this jump that we had on Friday. Now, we closed near the low end of the bar, but clearly well above the prior price action in the week. So, hitting new 2-week highs and almost starting to break through the prior highs here makes a big difference, and that's kind of where we're at on the dollar. So not a lot of comfort that this works out well if the dollar is going to keep accelerating. For the Eurozone, look at the number of these inside week, outside week. Lots of bars where I'll call it tepid movement, very undecided as we try to break through these trend lines. And then this week, the absolute, full-blown reversal on the euro from pushing up to higher ground here. Now, we never did get through that 115 level. So, are we going to break out? And we had this downtrend here on the PPO. It looked like we were starting to get through that. That would be, helpful. But if we're going to roll over under zero again, be very careful on that one, because this is the kind of setup where we get drawn in and then all of a sudden everything fails. So, and you can see my confidence here a couple weeks ago, nice back test, and off we go to the uptrend. And here we're back down. We're falling below this horizontal support and resistance level, and then we're also below the, I think it's 65 period moving average. So really harsh move in the currency at a critical point, like with the momentum's trying to swing on all of these different charts. The euro, again, on a daily chart just blown out here, you could see, higher highs, higher lows, everything looks good. Now all of a sudden we've given it back. We really need to hold this low of mid-June. Swedish krona says nothing to worry about. It stayed flat, and so just keep watching it. I didn't get any feedback on that one, so I was hoping it might give us some clues. British pound, it failed right at the upsloping trend line and dropped all the way back down and actually made lower lows this week. And we're breaking down on the PPO, so as that starts to head lower, and so momentum heading lower, breaking a 3-year uptrend, price breaking lower. One of the differences here was price was breaking down, but we didn't have any breakdown on the PPO. Now we have the confirmation of the PPO starting to give way. So this is quite an awkward situation where all of these charts have reversed so suddenly. And for believers in the U.S. dollar strength, it was hard to try and figure out why the U.S. dollar was reversing, but you kind of have to, given the trade you're seeing. And we started to see things like this yen breakout. Again, that euro chart had broken out, and now all of a sudden the reversal. So the yen is now on 2 weeks of lower lows and lower highs. The second week the first lower high, but now the second lower week, and lower closes on both of them. So that puts the whole gold trade into question if that's going to start breaking down. And I think if it gets below this big trend line, we'd probably see a relatively sudden move, because that would put everybody back offside. Here's the weekly trade on the yen, and again, here we had the high close and the breakout was breaking out on the PPO. Well, look at our histogram on the PPO. It's already rolling over on this weekly chart. So lots to worry about on the currency trade if it's going to switch this quickly. So, rather than calling which direction, I'll just say it's definitely set up for an inflection. We need to see that hold up a lot more. Just on the daily chart, this move down on Friday was not helpful. Dropped to new 1-month lows and bounced off that to close. I'll call it slightly off the off the lows for the week, but in general, a pretty tough performance. Okay, Canadian dollar has been pushing higher here, got the 77 level overhead, and we made higher highs this week on the chart, but we did not. We're barely above zero here on the PPO. So let's see if we can finally get some movement upward. That would suggest commodity improvement, but as we've just talked about, that might be in jeopardy. So Canadian dollar trying to get through this February high. We did make a higher high this week, but closed pretty much right at it. So we'll have to see how this wants to finish up. Aussie dollar, no real help on this one. It made lower lows this week and then closed near the highs of the range. But again, it's been breaking through this major long-term support and resistance level, and that's been helping the Australian stock market. So lower dollar, more export helps their dollar or helps their trade. But again, we're stuck here in this no man's land looking at this trade here. Hard to get too bullish on the Aussie. And again, look at the price action on Friday. These big chopping bars might suggest reversal rather than trend continuance. Emerging market currency. So this had broken out last week to a new high, putting everybody on notice that emerging markets would be a good place to get involved with. And we would agree with that. I would normally agree with that. This week it just gave it a little bit of a pullback. Now, pullbacks are allowed. The problem is where this pullback occurs. Again, we had just broken out, and the second component of that is we're having trouble getting through this March high in momentum. So if we roll over again here, pretty much suggests this up move has failed, and now basically just above zero rolling over would be quite bearish. So not happy with any of the currency move in terms of setting up the long-term trade for improving commodities and emerging markets. So, okay, the whole bond market, it looks to me like it's reversing. This LIBOR chart doesn't show that, but some of the others do. So here's HYG, and it's pulled back a little bit. And again, if risk is rising, so is this. So this gave back a little this week. Doesn't make it anything major. I would suggest if we start to break below 86.5, something's changing again on an unadjusted chart, which means we've taken out the yield. Okay, for the 7 to 10 year bond yield, this is the RSI pulled back hard this week. We actually had a tick down, and we're quite high in momentum. So this wouldn't be uncommon for us to kind of stall here on the bond yields, and that's why I think one of the reasons the financial sector looks okay, because it looks like these bond yields could start to change. So with that, here is the gap between the high yield and the stable 10-year treasury, 7 to 10-year treasury. And what we see is, this pulled down off the 40-week moving average, and now we were trying to bounce up here. But in 2015, this was an area that was a problem for us. And then in 2011, same thing. So far, the stock market has not performed anywhere similar with this sort of price action. We'll keep waiting. LQD was right up at the top level of where it's been at for the last 7 or 8 years. Got pretty much there and has pulled back, giving us a little J-hook. And we're still above 70 on the RSI. So if this was going to start to fail, this is the place we'd watch for it. The unadjusted inflation protected bond ETF. So here we are, and it was running up, and again, this gold line on here and West Texas crude was to say, does everything follow it? Well, crude has put in a lower high now, and gold obviously had followed this up. Want to keep watching, but look at our MACD here, way up at a very high level, and if that's going to roll over now, who wouldn't expect a change in trend? So watching that quite closely. Now here's the TLT, way up high, RSI just hovering around the 70 level. What did it actually close at? 71.86, and we've got an uptrend here in momentum. If that starts to break, I think obviously we'd know that that's a bigger deal. Now here's the BlackRock Municipal Bond, and I use this to help find the direction on the 10-year. It usually confirms it or suggests caution. What we're getting now is this is starting to tick down. The RSI has dropped below 70 after being above it for most of the year, and then we are starting to get a sell signal on the PPO. No real volume response here. It's not like somebody's aggressively starting to sell this off, but again, it's not that bullish. Looks like it wants to roll over. On the TNX, so again, that was bond price. This is bond yield. What we'd be expecting here is this would come down to this blue line and bounce in terms of momentum, and that would keep our rising lows intact here. But we did dip briefly below the move down here in 2017. So now we have a lower low in place and a higher high. The real question how this resolves is yet to be known. The RSI on this monthly chart got below 50, which is usually bearish. What we want to watch for now is can it start to get really moving to the upside, but it has 1 week in started to look a little bit better. Okay, 10-year yield, we had hit that 2% level last week, and we're trying to bounce from there. I'm starting to get comment from bank presidents. Again, we had this Jamie Dimon says, get ready for 5%. And it was pretty close to the end of the rally here. We've got a guy saying, expect lower rates are here to stay. So a real sentiment shift. And I think the important thing to be watchful of is if their sentiment is starting to shift, perhaps we can watch for change on the charts. Now, we on the 5-year here, what you can see is that we've zoomed in and we're up in this top corner and we're above kind of 3 weeks here. We haven't got to new 1-month highs yet, but to me it feels like this wants to reverse. The momentum is reversed. We've broken this downtrend from the beginning of April or May. So again, I'm expecting higher move here on the bonds. The 2-year, that doesn't look very good, but look at what's happening over here on the right-hand side. Very close to new 1-month highs if it didn't make it. But as we keep rolling forward here, all of the momentum was one way, so it's not hard to imagine that we needed to get a little bit farther to the upside. Okay, 2-year, trying to correct here after bouncing lower, really pulled down hard, has not been able to turn up. So I'm expecting the 2-year to start reversing, and once it does, I think that'll help confirm things. Now, this chart's really strange to me because, when we had the 2-year starting to fall below here, the stock market ended up going on to make higher highs, and we actually got to this 2007 point where it was pretty spread out, and that finished things off here. Well, look what the stock market has done. We've gone on to new highs. This thing is plummeting in terms of momentum, and yet it hasn't changed the stock market. So quite interesting just to see how all the news flow is changing the way things are looking. Here is the 3-month, and this 3 months since the big, well, call it the last day of June, is already up 5%. So this thing is moving quickly on the bond side. The US dollar or US 30-year bond rallying up, and again we started to mark that this is getting up to a level where it could probably reverse from 2% is a normal reversal level on the PPO, but 4% is possible. We're just at the 2% level. So while this might feel like such an extreme move in the bonds, we've been here before. Not sure that there's a whole bunch more to cover off here. It's kind of rinse and repeat on a lot of those bonds. Basically, they look to me like they're turning, and I've mentioned that the last couple of weeks that they were starting to build, starting to get so low on sentiment that they should probably have some sort of a shift to the upside. Okay, here's the transports, and we had a big push on Monday, and then everything for the rest of the week was down. We made new lows on Friday, well, new weekly lows on Friday, but closed back in the middle of the range. So lots of work being fought back and forth here. The transports the previous week had gone back above both the 50 and the 200-day moving averages. So that made it feel pretty good, only to stall right here on the rest of the week. So not happy about these relative strength lows. They continue to break down here. It just makes me more and more concerned about stock market going to new highs without the transports confirming. Seems to be a bit of a problem. Okay, so here's the transports. One of the things we're watching for is this bounce off the floor on the full stochastic, and if it was going to roll over at the 50, which it looks more like it wants to do, that kind of gives you this setup here like we had in the fall in 2018, where we kind of rallied up and then gave it all back right away. So here we are sitting there. Momentum's right at that same place and seems to be losing a little bit of speed. PPO is right at zero. Couldn't give us a much better flat level. So with all of that adding up, I think it's a pretty important place to be aware of. And again, we're just barely above the 10,000 level on that chart. Okay, airlines, nothing I want to trade here. I wrote an article about Air Canada, and Air Canada is up 500% while this chart is sideways, so it's quite an unbelievable situation. And I'll let you go read that article on the Canadian Tech Mission. Okay, Airlines Weekly. Only thing we might hope for here is a breakout to finally break this multi-year downtrend in momentum. I don't get the feeling that's the setup right now, but keep watching it. But to me, it seems dead money. I did highlight this, that we've had a 2-year uptrend in the railroads, and it's starting to lose its relative strength level, and it did bounce, and I tightened this line up, and now it's starting to pull back. I think a move below this 2300 level on the rails would be quite problematic. And if we look at the PPO, we can also see that it seems ready to roll over near zero. All of this suggests to me that if the transports were going to start to fail and commodities were going to start to fail, we might have trouble keeping these highs going in the market. However, all that being said, the sentiment is so vast and so strong, it's really hard to imagine that could be wrong. Okay, here's the railroads. We're sitting up in the top right-hand corner. Again, we've had this 2-year uptrend, this top red line, and we're just starting to test or fail near there. We have horizontal resistance going back to the beginning of the year, and horizontal support. And if we start to make new relative strength lows this year in the railroads, I think that would be problematic. The main issue that we have is as the railroads pull back, get down here. We've seen this movie before, and then they bounce nicely. So let's just watch and give them a chance to bounce. But I think if the rails start to underperform, I'm a little bit more concerned that things fall apart. And one of the big reasons was back in 14 and 15, where we had commodity weakness start to show up in 2014. The railroads broke down, and then the stock market topped shortly after that. So I think the rails can be a good guide as to what to watch for. And until we get that price action that I want to see, where commodities start to turn up and we get the rest of the world involved in the bull market, that's kind of the issue that we have right now, is we have this separation where it's kind of only one market really making new highs. I mean, there's a few out there, but for the most part, rest of world hasn't hit new highs, with the U.S. And again, they just made them. The U.S. market just made new highs this week. Okay, so we got horizontal support and resistance here sitting on the trucking industry, and again, PPO is just trying to cross. You can see on this zoom panel, we haven't got back above zero, so on the histogram, so we haven't quite crossed yet. And this scale over here on the bottom says minus 1.44. So when your scale reads negative, you haven't made the cross of the signal line. That third number would go positive, which means you've crossed your signal line. Then the other two numbers would have to be above zero to be positive. So watching closely, again, we've got this slight downtrend here. But we do not want to see these rails start to lose momentum just as we get back to the 40-week moving average. We're right at this horizontal red support and resistance, and we've just barely crossed our signal line. So this is an important point for the rails. Again, we we were pushing up, and kind of what you see. So the idea behind a full stochastic is that as price moves up, you have big moves, big moves, big moves. And then as you get towards the top of the move, you have smaller moves, both in price range during the week or day, and then you start to swing a little wilder when the market direction's less certain, and then it rolls over. So the one of the things we need to watch for. Obviously, everything is set up on tender hooks based on China trade, and yet nobody wants to price it in because they think the Fed will step in. Yet the jobs number was strong enough, so what if the Fed doesn't step in? Does the stock market actually start to let go on the basis that it sees the underlying trade weakness? So lots of debate out there. Anyway, automobile industry, that looks like a downtrend. I think we're still living in one of those. And when we go to the weekly chart, we were starting to get some bullish divergence here, but then we had a deep swoon and came back. Even here, we have higher low in momentum and same low in price, so that was bullish. But again, we continue to have this big downtrend. Want to watch and see if we can finally change some direction, but we haven't been able to so far. Okay, here's broker dealers, and they're trying to get breakout to new 52-week highs. Again, I talked about financials briefly at the beginning to start the show on the PowerPoint. Again, I spoke about it on Market Buzz yesterday. I wrote an article in the Canadian Technician about it yesterday. I wrote a Don't Ignore This chart article about Jeffries. So lots of reasons to start to look into the financials, but I think the biggest thing that we need to focus on, you have to take the trade when it's breaking out, because I think the financials are trying to do that, and they're a significant portion of the S&P. If they do break out, they'll definitely help lift the S&P to higher highs. The problem I have is the commodities are starting to weaken under the surface, and when commodities start to weaken, I start to get worried because it means something's going on globally. And we're just waiting. And again, that copper sitting on that 12-year trend line, oil stalling under the 200-day moving average, all that kind of stuff just starts to make things weaker. Now, XLI here is still trying to get through these prior highs from 2018. And you can see that we have an uptrend here on momentum, and it has hooked up, so that's good. The big issue here now is we just want to make sure that trend line continues and that the momentum in the industrials can follow through and break out. I have trouble if the transports, the industrials, and commodities are weak, thinking that the economy is going to be able to just kind of roll right through with that. So anyway, a little bit worried. Here is the semiconductors, and again, we've been watching the semiconductors for multiple reasons, but one of them is to just get a feel, can the new breakout in momentum hold? And what we see is this huge move that we had. Now we've made a low, bounced off the 200, come up, made a lower high. So far, we spent all week going lower. And now the real question is does this just break down? And I think, where would look first is on the relative strength chart up here at the top. If this starts to fail, I think that is a significant area of concern. So semis would also add to my negative sentiment. Again, I want to point out that the financials and the broad breadth of the market suggests the market wants to go higher. I'm pointing out some of the things that are a little bit friction to that, and one of the major ones was the US dollar, which rolled over all of the commodities, which might stall the world. So those things are bigger issues. That US dollar move was significant. Okay, I just mentioned breadth. Let's finally get to it. Normally I start with it as an underlying trend, and then we can talk about how it's working out. But here we have the NASDAQ advanced decline line, and it isn't at new highs, but the New York Composite is on their advanced decline line. And the reason that that's beneficial is the NASDAQ typically has some slippage on its advanced decline line. So in other words, it doesn't necessarily make higher highs all the time when the stock market does. So as an example, here in May, the stock market made a higher high. This made a lot lower high. Now the stock market is making a higher high again, and we're making a significantly lower high. This doesn't look as bullish, but if you look at the moving average of the advanced decline line, it's well up in the area of these big bullish pushes, so it's hard to argue with that. Okay, here's the high lows, and this started to flicker and give us the first sign of a big buy signal right here, like we got in July of 2016. Interesting that the bond markets actually reversed in July of 2016, and after coming off our lows of late in the year and starting to rally, and in 2016 we came off the lows of January, Feb, and started to rally, and now if the bond market was to change direction about 6 months later, it would be close to, we could probably say we've seen this movie before. With the high low, this first push up here is very bullish, and again, as long as it stays up it can wobble below zero, but as long as it can stay with the majority bullish sentiment, more like in this period in here, that's really what we're expecting. I will say one thing on here, that the net new highs has been timid still. Even as we hit new highs this week, not a lot of stocks jumped on the new high bandwagon. So that's a bit more concerning. Here's the New York Composite market, and the point I want to make on the New York Composite is that when its advanced decline line makes new highs, it's a much better signal. And at this point, this thing is living in the top right-hand corner, as is the chart for the New York Composite. And we have lots of breadth here showing up using a moving average for advanced decliners. So at this point, there's nothing telling us that it's about to fail. I will say this about the advanced decline line. In August here, it was pretty high. The market made a slightly higher high in September and a slightly lower high on the advanced decline line. But I think it was more important that when the trend broke, that's kind of when the market really started to change. So as long as this uptrend is holding, or general direction of uptrend is holding, I think you want to stay long the market. Here's the net new highs for the New York Composite. And what you see is this is very bullish. We're starting to get repeated pushes above 200, and back here in 2016, that was a good clue that things were really getting underway. Now, it doesn't mean you don't have chop along the way. It just means that there's enough breadth you're probably going to recover. Looking at the Canadian market, the advanced decline line, what you see here is we still have this lower high, which is quite concerning. And so much like the NASDAQ with its lower high, we have a lower high, and we haven't been able to break out to new highs yet. So continue to watch it. I always think the Canadian market will turn down before the US market, so it might be a better source of early intel on weakness. As an example, in 2018, the Canadian market topped in July, and the US market topped at the end of September. So there's a 2-month lag there where we got a little bit more info from the Canadian market. Okay, for the high lows, what would you expect? A nice big breakout? Well, that's what I keep waiting for to see on the Canadian market, and we're now 2 full years where we haven't been able to make more than 50 net new highs. Just crazy level of low, and we need that to start kicking in. And I think one of the broad problems, obviously, is energy isn't doing well in Canada, so it makes it very difficult for that chart to ever perform. Looking at the sum of the 5-day high-low index, this looks plenty high. It looks like lots of breadth here, and market is still very bullish. Okay, McClellan oscillator. Interesting, we're starting to get towards this trend line. I would say one thing that's more important is that we're up in this above 500 level, and typically that's very bullish, and the market can run for a long period of time with that as a backdrop. So again, breadth, screaming, helpful, bullish. NYSE, New York Summation Index. What we see here is this bump trying to push up. We're up around 600. Moves below 400 would be something to watch for. Again, we're headed up, not down, so that's still bullish. NASDAQ summation index, same thing, headed up, not down, so still bullish, and it's back above zero, which is very bullish for the NASDAQ. Okay, I have a few minutes left. I want to cover off the briefly the bullish percent indexes, and then I want to go show the Russell because I made a point of that at the beginning. Bullish percent indexes here back above 50%. We're still wobbling in this place here where the NASDAQ composite wobbled, pulled down, and the next high was the place where the market fell down from. We're up around 50% level. It's not as bullish as I would like for the broad NASDAQ composite, but the NASDAQ 100, this thing is screaming. It's up around the top of its level that it gets to, and you do not see many big dips on the right-hand side of all of these peaks. So that just says the market has lots of breadth and wants to go higher, especially in the technology area. Okay, for the New York composite, again, we're trying to bounce back up here. We're at 55% of the stocks, or 56% of the stocks are bullish. Looking down here at the percentage of stocks above the 200-day moving average, we're up to 65%, which is my bottom line. Once we're in there, that's usually pretty bullish, and the market can run for a while. So we're there. When we get to the S&P 500, we see the same thing. We're up in the top above the two lines that I like to see it above, and plenty strong. So we don't see any level of discomfort there. Looking at the percentage of stocks above the 200-day moving average, we are, hovering in the area we've been in for the last 4 or 5 years. So plenty strong during the bull markets. Canadian market, not quite as robust. We're at around 55% on the 65% on the percentage of stocks above the 200-day, and 60% on the stocks above the on a buy signal. So we're holding in there. I would say it doesn't, this just doesn't look great. We're at one of the highest levels we get to on this Canadian chart, but we, again, we haven't had that great a market. We've been going sideways for 3 years now. So we need more thrust, and I was hoping the energy sector was going to get that for us. Nothing to really show on the bullish percent indexes here, so I'm going to leave that. Let me head down and start with the Russell and maybe work my way back up. So the problem I have here on the Russell is the momentum is right near zero, and we're right near a low in momentum. And so if the Russell starts to break down again, I think that causes more weakness. And normally when the market pulls back, so here's the 2018 pullback, that second leg down happened when the Russell broke through support, and we saw the same thing back in 2015 into the 2016 low. The Russell broke support. So here we're trying to hold above it. We're above the 40-week moving average, so that's helpful. But we're making new lows in relative strength, and I think those new lows could cause some friction for us. Doesn't have to, but they're definitely worth watching. For the IWM, we have this downtrend in momentum, so we get our bounce here, and now the real question is we want to see it do this, right? We want to get up into this high area, and we're in this transition zone. So until we get through the transition zone, we got nothing. So that's a pretty concerning area for me. Now, I just want to run back up. There's one more Russell chart I want to show you, and that is this one. And so what I show here is this downtrend in relative strength. Again, we saw that back in here as Russell really started to underperform. It was a problem. And now we've got this trend line. We're right at it. We've got a downsloping 40-week moving average, and we've got momentum just coming up to the trend line here. So it doesn't mean it's going to fail. It means it could potentially break out. The real question is, what is it going to do? And I don't like the fact that we got the J hook on the or the crochet hook on the top of this relative strength move. So with all of that, it suggests to me that the commodities are much harder than they look like they were going to be. Banks are an interesting area. I want to say thank you for taking the time to listen to my work. If you have any comments, please email me back at gregs@stockcharts.com. And thanks again. Have a great week and good trading. Bye-bye.